Hello, this is Jeff from System Trader Success, and we're going to take a look at the seasonality effect on the S&P cash market. What I have here is a trading system that's going to buy 100 shares of the S&P on the first day of October and then sell those on the first day of May. We're going to look at a popular stock market saying of buying in the fall in October and selling in May. Sometimes this is called the Halloween effect, or simply sell in May and go away. What I have here is the S&P cash market going back all the way to 1983. I was curious about this study. I haven't looked at it in a while, and how has it been doing? This is the equity curve. You can see it's been a very profitable type strategy, and trading 100 shares generates these results. These are very nice looking results. Of course, you got to keep in mind we don't have any stops in place. You can see over the last couple years it's done extremely well at buying at the low of the market, lower range of the market, and buying and exiting at the top. Here's another one in 2009. But of course, if you go back to the beginning of the big bear market in 2008, we have some losing trades. And of course, you're going to be holding through these periods in this trade example. So that's some significant drawdown. Of course, this isn't a trading system. It is an indicator, and the point here is, what are the best months that show a long bias? Let's take a look at the strategy inputs. If you go to the strategy inputs, we'll explain these in a little bit. These are explained in the article, but what I want to look at is the buy and sell months. I optimized over these 1 through 12 and 1 through 12, and the combination that produced the best results was buying on the 10th month of the year and exiting on the 5th month of the year. So we can clearly demonstrate that the adage of buying in the fall and selling in May produces some very good looking results. In the original article, which appears on System Trader Success, if you're viewing this on some other forum, such as YouTube, please go to System Trader Success, where you can actually read the article associated with this video, as well as downloading the strategy code used. Here's the strategy code, and as discussed in the article, we're going to apply two different trend filters. We can apply a short-term trend filter by entering the number of look-back bars, recommended as 20, and then there's a major trend component, which is a longer term look back of 200. So these are explained in the article, and as inputs you can activate those by simply filling in the values. Let's actually not even use the minor trend. We found out through our testing that the minor trend helps, but the bigger boost in profits comes from designating a longer term market filter. Now, by activating the major trend filter, what is this going to do? Well, let me put on here a moving average. Okay. Essentially what we're going to do is during these long periods, we're going to make sure that price is above before we go long. So it's going to eliminate some of the trades. You can see in this year, in 2002, the market poked its head above this moving average, just enough to trigger our trade. But it did keep us out of some other trades, the bear market through here. And so we have an even smoother curve. And of course, here's the performance report, which has a 6.1 profit factor and a 77% win rate. Really does a fantastic job. As I pointed out in the article, this isn't necessarily a trading system per se because we don't have stops in here, okay? But it does show you that when price is above the 200 period moving average, going long between October and May does show a strong bias to the long side. So perhaps you can use this in your own personal trading or when developing a trading system. Let me take a quick look at the strategy code inputs once again. Just want to show you that these first two inputs do control the trend filters, long and short, and you can enter 0 to disable or enable them. Excuse me, you can enter 0 to disable them or simply activate them by entering the look back period. The next, of course, is iShares, which is the number of shares you want to buy, and of course the buy month and the sell month. Okay, those are the input values. Now what does this look like on Qs? Let's bring up the Qs, QETF. Now you can see I brought this one up first because this is the one that shows the most weakness. It's really got hammered early on, but has been bouncing back. It was that initial trade after the dot-coms. You'll find that the other broader markets, such as diamonds, this is what diamonds looks like. Let's look at SPY. SPY looks fantastic. Okay, for those interested in the strategy code, the first thing we do is restore the current month. And the next section of code here, what we're actually doing is looking for when the months switch between our buy and sell type modes. What this allows us to do is set these variables. I call these state variables. And it tells us what state are we in. Are we in our long mode and our short mode? And what this would allow someone to do if they're interested in developing a trading system is all throughout the buy mode, for example, if we have long mode set to true, you could put a case statement in here like so. Then begin. I'm just going to stub this out. Else, if short mode, then begin, end. Okay, ideally what you could do if you're interested in making multiple trades throughout the year or using this as a filter for a trading system is during our long mode, your logic for longs, and down here, logic for shorts. So for example, what you could do is during the long mode, these are the periods when we have a long bias, you can be looking to enter trades on the long side, and down here, trades on the short side. So what could you use in there? Well, you could use anything. So if you have a trading system that's based off of daily bars, you can easily integrate this. It would take a little bit more work if you wanted to do this on intraday bars. However, this is an example of where you would insert your code to only take long trades based on our seasonality filter, which we've demonstrated here. We've done a lot of research in regards to the mean reversion characteristics of the S&P cash market, the S&P futures market, and so what you could do is place the buy orders and trade management for our RSI. There are several examples of that on our website. This could potentially increase the profitability of that. So, I guess that's it. It's a rather simple study. Got some rather simple code here, but it does seem to be a powerful filter that could be utilized in your own trading. So I hope you found this useful. Thanks again.